Bitcoin, crypto, morning tea. Hey. Good morning, everybody. My name's Pianomattyb. That is Scaramucci's. This is your morning TA. A brief glimpse into the crypto markets where the sun shines. The humble opinion of this piano Zamboni bringing the The FOMO index has jumped up to 45 from yesterday's 30. Bitcoin dominance 60.7%. 24-hour volume 67 billion. The overall market cap 2.86 trillion. Give or take 100 million. Well, it looks like we had what some legacy bull market aficionados would call a little pump. After rallying Thursday up to our channel of ascension's resistance and getting a how-to and a what-for rejection, price action soaked back down to retest this channel support and pout with the 20 and the 50 moving average all weekend long. And then in a bullish turn of events, our scheduled Sunday dump turned into a Sunday pump, and price exploded up and over the 200 moving average, peaking out at 87.5, where we basically are now at time of production, placing us above all three moving averages for the first time since the end of January, if you can believe it. My bullish outlook for today would be to see price action continue up and retest this channel's resistance up at 90.3-ish, and if the bullish ducks are by the pond, my heartbreakingly bullish outlook would be to blow past 89, retest this old channel of eternal monotony's resistance, now acting as support way up at 91.4-ish. Now over on the ding-dong, you can see we finally did get up and over the candle close above the 200 moving average, so we are officially bullish again. And are currently trying to break out of this triangle of neutrality's resistance, which is also the support level of this channel of eternal monotony, now acting as resistance. Now I say if we can flip this triangle's resistance to support, the next bullish level to keep your peepers on is the 50 moving average up at 90.3-ish, which is also our bullish outlook back on the 4-hour chart. So that's some double word bullish conflui at that level. But ultimately on this chart, our macro metric for bull market health is to get back up and over the 111-day moving average up at 95.3-ish. Below her, we will always be at the mercy of continued bearish pullbacks. And although it may seem like a far-off target, it's really only a 9% bullish mood swing from here. Quick look at the Wookiee. Sees we did close the candle green, locking in a 2-week bullish run. And although it doesn't seem like a big deal, we haven't seen 2 green weekly candles in a row since mid-January. And before that, early December. Now we are currently bumping our heads on the 23.6% fib. But the final boss of bearish Karens is the 38.2% fib. This is that relief rally headwind that we desperately need to break through. And with the macro tailwinds, Whistling Dixie up our Adirondacks. It's the humble opinion. This piano that this week will be the week we do that. Fingers crossed. Would you look at that, my friends? The sun's up. It's another beautiful day here on planet Earth. The day none of us are guaranteed. We're not guaranteed these days yet. We're lucky enough to have them anyway. So get out there, knock 'em dead, and remember, we're playing the same game as our psychopathic elected leads. And that's right, it's the long game. So zoom out and have a fantastic day. And we'll be going live right away, so grab yourself a coffee, join me for a quick one, and by all means, sing it with me now. On the banks of boom the spang, Bitcoin, crypto, morning tea. Hey, whoa. Ching. Now we are getting rejected from 88K, which is there's good news and bad news in that rejection. First, the bad news is just, you don't want to see a rejection from 88. We want to pump through, but at least we haven't hit that dreaded, the only, the 38.2% relief rally price. Once we get into this target, and that's basically, I'm going to say 89-ish, because it's not an exact dollar figure. It's not an exact number. It's basically the stash coming in good. This isn't a mustache in progress. This is just a weird, when I went to shave with my razor, it started to go on me. And I could tell that I wasn't going to make it. And I had to say, okay, well, what am I going to shave and what am I going to not? And you can see I never go to the wood, right? So the mustache, it'll be gone today. Don't worry. I know how mustache works. Men like mustache, women like makeup, and then it doesn't go the other way. Anyway, the 38.2% relief rally up to 91.5-ish. Is once we get into here, this is where I'm going to get nervous, right? Because this is, like I said before, on all bull runs, when we hit a high and we have a correction, if we don't get above that 38.2% relief rally, we generally head into, what some legacy analysts call a bear market. Isn't that loud, actually? Let's get this piano a little louder. Oh, I see. No, that didn't do it either. Anyway, so that's the good news and the bad news. We'll be watching that. I thought maybe last night I was going to have to come in at like 2 or 3 in the morning with the live stream. Can you imagine all the viewers there? There'd be probably, well, no, because the mom and the sister wouldn't be watching, so there'd be 0 viewers at 2 or 3 a.m. Now, you can see what we don't want to do here. We'll make this a little bit bigger here. We don't want to carve in a bullish, or sorry about that, a bearish engulfing candle, which would have to be we close in the next little bit at 86.8 or under, because it would just look like, dag nabbit, the perfect little reversal, wouldn't it? You get to the top, you put in a bearish engulfing candle, and then you head down. Now, if we head down, we would head down and test this channel, 84.8. And the significance about this is what I don't like. This was the bad news, kind of, is that 84.8 is that futures gap, right? Now, these are all self-fulfilling trader
prophecies, right? This is the only real power I think retail kind of has, because they dogpile in on these psychological front runs, right? So this is why these gaps usually close, because they're like, oh my God, this is a signal, right? It's really like the only self-fulfilling prophecy signal that there is in the markets. Everything else is just probabilities, but these have a high probability. So 84.8 would be where we close that gap. And I mean, I look at it, if that gap closes at 84.8, it's almost like the last hole in the boat was plugged. Now it's smooth sailing, goddammit. We got that one little hole. We know we're heading off into the ocean. We all know we got that sneaking suspicion about that hole in the back, that futures gap at 84.8. Not saying it will, but you can see how this would play out. A nice little bearish engulfing candle here. Close it at 86.8 underneath the 200 once again. And then we would go and retest this channel of ascension at 84.8. You know, you look at the RSI. She's a little hot. Coming in hot here. Really look at the last time we hit this peak. You know, this is a higher high. I like that. And, of course, a series of higher lows. So all in all, we are trending upwards. I mean, it's boring, and it's not really moving to our liking. It's not really getting that, you know, dopamine hit. It's more just kind of like another day, another dollar, another rejection, another engulfing this, another engulfing that. So nothing really crazy is happening. However, the overall trend, the market massage, if you will, is upward. It's upward. It's bullish. Even if we were to retest this channel of ascension at 84.8, it would still be a higher high. So those things, I mean, it would fall into maybe this weekly, you know, the monthly options closing, you know, the max pain. I can't, 84.8 the max pain. I can't remember what it is now. I'd ask Grok, but it doesn't keep up with, you know, the daily things. Did you know that Grok and the Twitter algorithm or X algorithm is based in October 2023? That's the cutoff. So it has 2 years, and it won't scour anything for you, which is kind of bizarre. 87.1. How far away are we from this printing this bearish engulfing candle here? We're not too far. We are less than 1% away. So she's a high probability of doing that, but that's a 4 hour noise. 4-hour noise, a little so and so. Now we could go down to 84.8 and come back up. It wouldn't really affect the daily chart. It's just you know, we're looking at these are the dopamine charts where we get a little more action. Well, yeah, it's getting higher. Yeah, oh yeah, but really you zoom out. You know, nothing's really changed. Now speaking of the ding dong, you can see our massive rejection of our points of confluence. So here we go, trying to break out of this channel, this triangle of neutrality. Breaking to the upside is what we want. We don't want to break to the downside. Where's 84.8 here? Is it right at the 200? Yeah, basically right around the 20 moving average, and the 200 moving average is where that futures gap is, 84.8. Yeah, cherry blossoms all set. I put that in because as I looked at Google Trends, it's had cherry blossoms. So I'm like, oh, let's test this goddamn YouTube algorithm. If it's the last goddamn thing I do, they say put in trending words. Okay, well, I'll put in a trending word. Doesn't make any difference with Bitcoin. Bitcoin cherry blossom doesn't make sense, right? It's confusing. The algorithm, it knows not where to go, knows not where to send people. Anyway, we got the double rejection from our channel of eternal monotony's support now acting as resistance, and our triangle of neutrality. So could we, you know, bebop, loobop in around here for the next couple days? What will this take us to? This will take us to Friday for a breakout. Yeah, let's see. What is this? We have that 2% range. 2% range to close out this triangle of neutrality. That would be one hell of a boring week. Can you imagine? Do you have a 2% range in mind? Is that going to get the dopamine blood boiling or no? I don't think so. It's gonna get the comatosia settling for a week. 2% gains here or there. We'll make mountains out of those molehills. Don't get me wrong. It's like, hey, we went up 2%. 2% were really when you look back at it, we were sitting here at 82.7 for millennia, right? For millennia, back when they didn't have any power tools back in 1895. And then we are in the midst of a 5% pump. I know. Nothing to write home about 5% pump. It's not the biggest deal. It's not that exciting, but there are, the takeaways is that we are currently, knock on wood, above the 200 moving average on the 4-hour chart and the daily chart. Now, what we don't want to see here, we don't want to close today's candle beneath. Let's say we go and we grab that gap. 84.8 and we close the day. So we the market closes. Did Michael Saylor buy 6,000 more Bitcoin? Yeah, he did. Is the price going down now with that news? Yeah. But, that's how the market works. Some big whale comes in and, says he buys $6,000 or 6,000 Bitcoins, and of course, the market goes down. That's how this, let me get this, shut me out here. That's how the market works. We know that, right? We know that. Anyway, that is some bullish news. I'm not talking to you, Grok. Don't get your AI panties in a bunch here. I'm not talking here. So let's say that's something that could play out. We could go and close that gap today, but unfortunately on the daily chart, that would be a close under the 200 moving average. Which Sneaky Pete, he did announce a 6,000 Bitcoin purchase. He's above 500,000 Bitcoins, if you can believe it. Michael Saylor, over 500,000 Bitcoins. It's insanity. It's insanity. Anyway, so 6,000 in Bitcoin? No, I don't think so. Imagine that announcement. Michael's strategy B is proud to announce that we just bought $6,000 of Bitcoin. Anyway, 48.8 would close that gap, but we would close it under the 200. Listen, I really don't want to close underneath the 200 moving average on the daily. If we're going to snooze fest our way through the end of March and into April, well, as long as we're above the 200 moving average, I'd like to get a little more above it. I don't really want to be straddling the 200 moving average. That's not that bullish. But if we can get above it, it'll be more bullish. I'd say back into this channel of eternal monotony. And now this channel is not the greatest channel either. If we go back, it's just basically existing because we entered it way back here. 87. But we spent the most of the time on the Upper East Side of this channel of eternal monotony. So it would be nice to at least get back into there, because this is a couple of things that would happen. If we can get up and over the 111-day moving average, which is basically our macro metric of bull run prowess above this 111-day moving average, we will be back in the Upper East Side of this channel of eternal monotony. And even though it's not the biggest or most important channel, it is, after that, we're basically in the penthouse of channels of eternal monotonies. And then I suppose maybe, just maybe, people might be more bullish. And when I say people, I mean retail. We all know retail isn't here. That doesn't matter. They'll come in. They'll come in when they start comparing. See, the beauty of FOMO is a comparison, right? It's people see someone who got lucky in Bitcoin. You know those lucky bastards that just, took a bunch of saved capital, put it in Bitcoin and sat through bear markets and winters and, down 80%. You know those lucky bastards that do that? When they see those lucky bastards, reaping the rewards of their discipline in the market, that's when the FOMO comes in. Oh, that guy can be so lucky, but I can sit through 8 years of bear markets, can I? I would argue you can't. It's only a small few that can, and really the small few that actually exist up and above a couple cycles, they're just so much above their initial cost basis that the pain doesn't really reflect sitting in the weeds, if you know what I mean. It's not as gleeful and as joyful and as dopamine ready as a big gain, but you're still above your entry point, and people are generally, it's easier to hodl at that point, but it's not that easy. It's not that easy. The mind plays weird tricks on you, especially in these days. But what's amazing to me is that I feel like this is the part of history where you don't necessarily know you're part of. You're kind of flying by the seat of your pants. You decided to invest in this magical internet money. Things have been going pretty well, since it started. Yeah, there's some lower lows and there's some bear markets and everything, but generally things are going pretty well. So the concept of, when this basically mayhem comes into the market, this monetary mayhem takes over and controls the future of finance. We'll look back at this and just wonder, A, how did you ever get into it? B, how did you ever last long? How did you endure it? And how did you survive? Everybody has their why, don't they? What is your why? Mine's pretty. It's easy for me because I have Duke, right? So Duke is my constant why. When we see here, this isn't old. Don't worry about these Fibonacci's. This is the Fibonacci to keep your eyes on. You can see here where you're just mincing words right at this 23.6% fib. It's always those fibs. It's always the fibs. Those damn Fibonacci's. The universe likes to go to them, so now we're bumping our head at the 23.6% fib. Will we get over it? Yes, but the next stop will be all papers aboard. This will be the big one to check out. Now, are we going to have this massive MicroStrategy pump today because he bought 6,000 Bitcoins? Probably not.
Make sure you like and subscribe and share this video.